and I think some level of stimulus as we get towards the end of the year is important. But whether it happens in the next week or not is probably not that important. So what I think for most investors, what they really need to focus on is looking out into the first quarter next year. We should have some stimulus. We should have some vaccines. And we know that we're going to have this continued central bank support globally, and that is a strong environment for us to continue on a recovery path, and that means that stocks can probably do better as we go into next year.
Does it matter who wins the election, Mark? I know that it's a very broad question here, but it seems as though many experts, including yourself, claim that the bull market is intact. Things can continue higher. So how much should investors pay attention to policy rhetoric coming out of the candidates if, in fact, the bull market will stay intact no matter who wins?
Well, I guess one of the things to do is look at history. And throughout history since 1932, excluding 2008, the S&P 500 has typically been slightly positive 1 month prior to the election. Then you can get some volatility, but then it continues to go higher into the new year. So in some ways, it doesn't matter. Now we know that for certain sectors and for things like tax policy, the certain things can do better depending on who wins. But broadly speaking, whether it is leaning more towards providing fiscal stimulus with lower taxes or fiscal stimulus through more government spending, that is stimulus, and that should help continue the recovery.
All right, so if stimulus is going to be in play, regardless of who wins the White House, perhaps who wins the Senate, blue wave or anything else aside, what exactly then is the outlook in 2021 for investors? Is the stimulus going to be driving pretty much everything that's happening in our macroeconomy here in the U.S.?
I think that ultimately getting the vaccine and getting more of a return to normal is more important. And, we know that the science is coming. We just don't know the exact timing yet. But that's probably, ending that fear of going out and living your life or going to a restaurant or going to a movie or getting on a plane, that's probably the most important thing. And we'd remind people that while we've had a spike now as people have gone back to work and school, that timetable, we don't believe that timetable that we set out over the summer has been pushed back meaningfully. Most of the drug programs are still on track.
We just showed viewers out there 3 different scenarios that you've laid out there in terms of kind of what your cases could be for upside, downside, and a base case. For listeners on SiriusXM Radio, I'm just curious, what exactly is the base case and what are the opportunities that are there in case things do get volatile?
Yeah, and I think it's important to look at things in a scenario analysis because so much now moves beyond kind of markets and what we learned in school about economics, and it is about politics and things. And that's why, politics isn't always amenable to rational analysis, and that's why you have to have scenarios. But in the base case where it is likely that the White House changes ownership, we think that buying into sustainability is going to be very important. I'd note that certainly for the U.S., the green agenda could change, but globally it's changing very rapidly with both Europe and China committing to carbon neutral targets, with Europe committing about 1.85 trillion euros in stimulus over the next 7 years towards greener infrastructure. So that is something that we would ask people to take a stronger look at. But then, as with some of this volatility recedes and the economy continues to move forward, we think by next summer the S&P 500, for example, could be at about 3,700.
Shepard Smith here. Thanks for watching CNBC on YouTube.